What's going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about a stock that I haven't talked about a whole lot on this channel, but it is a stock that I do own, and that is Microsoft. So Microsoft is a very interesting company because it is a company that has held up very well over the last year or so. You can see the PE ratio here is sitting at 24.69. The market cap is just under $2 trillion, and the dividend yield is at 1.19%. They have been beaten down in a massive way here today, but we are going to get into this stock and look over its free cash flow and basically trying to figure out where an appropriate value is for Microsoft stock. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. As I mentioned, the stock here today is down 4.37%. Over the last 5 days, down 3.3%. Over the last month, down 8.43%. Over the last 6 months, it's down almost 13%. And over the last year, it is down 27.59%. So it has been beat down a lot over the last year. The broader market right now is down around 20%. So it has suffered more than the broader market. But when you compare it to companies like Tesla and also Meta, those companies are down way more than where Microsoft has been beaten down over the last year. With Microsoft down almost 30% over the last year, you would expect its valuation to have dropped in a very significant way. But when we look at its current forward PE ratio, we see that it's sitting at a 25.19 right now. To put that in perspective, the S&P 500 right now is trading at a 17 forward PE ratio. And what that means is that Microsoft is actually trading at a 30% premium compared to where the S&P 500 is at. Not only according to its PE ratio is it trading at a high valuation, but when we look at its free cash flow, we see that it is actually trading at a very high valuation. So what we are doing here, we are breaking down the numbers. I will run through this real quick. So outstanding shares, we have 7.45 billion outstanding shares for Microsoft. Its average free cash flow over the last 5 years is 47.40. So that comes from these numbers that you see over here. These are pulled from Macro Trends that basically has the free cash flow numbers you can see listed here. Just to go through them quick, you can see these numbers listed out. So $65.149 billion is what their latest free cash flow number is. And again, that number is listed here. And basically that averages out to this 47.40. And then we build in a margin of safety of 10%. So we have an average free cash flow of $42.66 billion. And what we have done here is actually a little bit different than what we normally do. So we have actually plugged in a 2.5 number for the required rate of return. What we normally have in here is the 10% number. If you've seen some of my previous videos, that's where we like to target, is somewhere around a required rate of return of 10%. And with that, we would actually have a price per share of $57.26. So obviously that is way off of where the current share price is at right now. So what we have done is we have basically backed off this number, and we've backed it all the way down to a 2.50% rate of return. And what that means, and the reason for us doing that, is because we're trying to see where the current stock price is at right now. So it is trading right now around $229. So if we jump over here, basically at a 2.5% return, you are sitting at $229. So what that means is that basically for buying Microsoft at $229, you are buying a free cash flow yield of 2.5%. So obviously 2.5% return on your money is not great, especially when you're investing in what could be a risky asset. So what we want to look at is, this is backward looking. So we are looking all the way back to 2018. So we want to do the reverse and basically turn around and look forward thinking. So again, we can look at these free cash flows. We can see that they're trending in an upward direction, and we can find a compound annual growth rate for this trend. So what we have here again is in 2022, we have this $65.15 billion in free cash flow. In 2018, we had $32.25 billion. And then we can take that and plug it into this Excel formula here and basically get a compound annual growth rate of 19.2%. And then we can basically project out free cash flows. And what that gives us is in 2026, we could potentially have a free cash flow number if Microsoft continues this 20% growth or 19.2% growth. We would see a free cash flow number of $131.53 billion. And what that equates to at the current share price is a 5.03% yield on your money. So a 5% rate of return is nothing to write home about. The S&P 500 returns anywhere from 8 to 10%. So we tried to take it one step further. What we did is we added in shares outstanding and the decline from basically buybacks from Microsoft. And we kept everything else the same. So you can see the compound annual growth rate of free cash flow is still sitting at 19.2%. And then the free cash flows, again, you can see that they match with the numbers above. So in 2022, we had $65.15 billion in free cash flow. In 2026, we're projecting maybe $131.53 billion in free cash flow. And then what we did is we basically found the shares outstanding in 2018. They were sitting at 7.794. And then in 2022, again, we have this 7.45 that we pulled off Yahoo earlier. And what we can find is the compound annual decline in shares outstanding, and that comes to 1.12%. And when we compound that over the next 5 years, all the way out to 2026, we can see that we get to 7.12 billion shares outstanding. So what we can come back and do is we can plug in that 7.12 billion shares outstanding, and we can see that this is the share price that we're sitting at about right now. And what that means is the rate of return by declining shares only gets us to 5.26% rate of return. So all of these cases that we've looked at are lower than where you'd expect the S&P 500 to return, right? The highest being this number that we've seen right here of 5.26%, the potential of returning that. But one big thing to consider in these last two cases is these free cash flow numbers, and are they viable and achievable? Basically, you're projecting, again, a double up by 2026 in free cash flow. And one thing that really needs to be considered when looking at that number is interest rates, because lower interest rates are going to promote a business and allow a business to grow its revenue, grow its free cash flow, invest in other businesses, buy other businesses, whatever it may be. But when you start seeing some of these numbers, these interest rates going up, you have to start to wonder, is money going to be available to Microsoft for them to grow their business in a massive way and continue compounding their free cash flow growth by this 19.2%? In my opinion, I think Microsoft is a little bit overvalued right now. So I think the stock needs to start getting down to around the $200 mark, if not lower, for me to really start considering purchasing shares. I would love to see the stock under 150. 150 is really a price target where I would become very, very interested and start picking up shares in a very massive way. I just think right now that the company, they do have a lot of positive things going for them, and I do think they have a lot of potential at growing their free cash flow and the revenue and all EPS, basically all their numbers across the board. But I think the stock right now is just priced basically to perfection. So again, I'd love to see it pull back a little bit and basically start adding shares. But right now, I'm not really a buyer of Microsoft. So overall, I hope you did enjoy the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.